Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, cut your taxes, and have a beautiful retirement. What could be better than that? I am one of your co-hosts, Ben Barzideh. I have my co-host, Matt Nadeau, here.
Hey, everybody.
We are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located right here in Barrington and serving the greater Chicagoland area. And we got to talk about Halloween weekend.
It's that time, Halloween. Here we are, guys. Hopefully, when
actually-
you're hearing this, you've had a blast at Halloween and you're recovered by now.
No doubt. Hey, is Halloween big in your neighborhood, Matt?
It is. We have a bunch of kids. The problem is they're done trick-or-treating by about like 4. It's like they
Sure.
rush out at 3 o'clock. So a lot of times we're not even back from the office.
Oh, no doubt. It's big in my neighborhood. I live in Huntley. There's a bunch of kids in our neighborhood. And in fact, some of the neighbors are real cool. Some give out like shots or these cocktails, little mini cocktails for the adults. And we have this one neighbor. He actually has a big garage and he gives out all these hot dogs and chips. The guy must go through like 400 hot dogs each year, I bet.
It's like the Costco of your neighborhood. Here's a hot dog for you, a hot dog for you.
No doubt. So my wife and I, each year we plan to come up with a way to one-up him so everyone likes us more. We've thought about maybe giving out like tacos. Everyone likes tacos, right? Or
Yeah, they do, but that's a lot of work.
mini gyros or kebabs or something. But we always talk about it and never do it.
Yeah. Well, either way, hope you guys had a happy Halloween. And I guess, kind of talking about fun things. One of the things we're going to talk about in this show for a minute, Ben, is we had our Bardeau wine tasting event. And I think, as the kids would say, it was lit. It was great. We had a good time. We're just going to tell you a little bit about that. Hopefully, all of you who weren't able to make it can come next time. Obviously, this week is Fed week. We got to talk about the Fed meeting. Not too big of a bang, but there's a few things we want to talk about. And then we're going to circle back and bring up rare earth minerals again. It's hitting things. It's big time. We want to go over it. And then later in the show, we're going to talk about a tax benefit called tax loss harvesting. We'd like to say that's like turning lemons into lemonade. So you don't want to miss that as well.
No doubt. And because of Halloween, I'm actually wearing the only Halloween colors I had, a black and orange polo. And actually, you won't know because when you listen to us, usually it's on the radio. But this is another reason to visit our YouTube page, because shortly after the show airs on the radio, we actually upload the whole video of our show so you can get to see us, see how handsome Matt is. And then you can also subscribe to our YouTube channel, our Facebook page, our Instagram, a lot of good stuff on there. And then lastly, please subscribe to our weekly newsletter called the 5-Minute Market Brief. It's informative, succinct, and easy to read. And you can also sign up for that at bnwealth.com.
Yeah, a lot of good stuff. Please subscribe. It helps us out. It helps you out. And you'll hear about things like our fantastic Bardeau wine tasting event we had last week. It was our first ever, again, Bardeau, our last names, Barzideh and Nadeau. We decided to do a wine tasting event. It was great. It was so much fun. We had a nice intimate group that were at our office. It was a bunch of lovely people who really wanted to learn more about our firm and potentially work with us. And we had some amazing wine. The food was just as good. And it was catered by Montera Grill. We'll give them a shout out because it was fantastic. It's one of the best restaurants in our neck of the woods. So thanks to everybody who came out. And it was a blast. And don't worry, keep tuning in because we'll let you know when another one is coming up and other events like it. So we hope to see you all at the next event.
No doubt. So let's talk about the Fed. It was a big week. So of course, we're going to talk about our favorite Fed chief, not favorite, depends. Jerome Powell, AKK J. Powell. So as usual, he had some not positive things for the market to say. And even though the Fed cut rates this week by actually 0.25%, the market still tanked. Of course, as soon as he started talking.
Yeah, I mean, tank's a little strong, but I mean, what's this guy's problem? Doesn't he know, like, just soothe into it? Because instead of just going along with the flow, he did give us a hawkish surprise where he pushed back that another rate cut in December was inevitable. And he noted specifically that strong differing views on how to proceed was the key phrase he used about moving forward among the different policymakers. Now, that doesn't mean it won't happen in December, but the expectations for a December rate cut were above 90% before he started talking. And then once he was done, they fell to 55%. So basically a coin flip.
You know how we've talked before about how Powell's like that doctor with the worst bedside manners? Well, actually, I think he's even worse. He's
Oh, come
more
on.
like what I call Dr. Google. That's when you have a pain or a symptom and you Google it. And of course, it says you have cancer. And then
Always.
you freak out for a few days. So you could have fallen down and hurt your finger or whatever. And then Dr. Google says that you have finger cancer. Well, Powell's kind of like that. His term is almost done anyway, though, so maybe just a few more months. We must put up with this guy. No, all kidding aside, he's actually not that bad. Tough job he has.
Yeah, tough job. You're always balancing things. But, I mean, realistically, let's look what this means. Not much. The market shouldn't really be that affected moving forward because there's still a good chance we could get a rate cut in December. And I think the most important thing is he really didn't imply that this rate cutting cycle we just started is going to end. It's not so much like the month that the Fed's going to cut rates, just as long as they're still cutting. That's what matters. And lastly, the number one driver of this market by a far measure, come on, guys, it's still AI. I mean, AI enthusiasm is shifted into overdrive with these multi-billion-dollar announcements and mergers. It's like every day you're seeing this. And so nothing in Powell's speech is going to dull that. And in fact, I think this was a positive. He pushed back on the similarities between the AI period now and the tech bubble in the late 90s.
No doubt. He also announced an end to QT, quantitative tightening. People might think, what is that? Well, that was the program which was the opposite of quantitative easing, which basically counterfeiting. So instead of creating fake money, they were uncreating that fake money. And in December, they'll actually stop doing that. So all kidding aside, that should be a little positive for the market because it should add some additional liquidity that was being sucked out. Now it's not. So it should help ease yields and help the market some. So that's a market
Absolutely.
positive.
Yep.
Okay, so the big topic we want to talk about right now is are rare earth mineral investments the new AI? And last week we talked about how rare earth materials are at the center of the latest China US trade spat, as China actually controls 70% of the global production and more importantly, almost 90% of the refining capacity. And given this vulnerability, the US is actively sourcing rare earth materials from more friendly sources, and that's creating an interesting effect in certain stocks.
Yeah, so I want to relate this to AI because if we go back about 2.5 years ago, following the explosion of ChatGPT, an interesting thing began to happen when we would hear these different earnings calls. If a company just simply mentioned they were investigating or incorporating AI into their business, boom, the stock would typically jump no matter what details they had of the plan. And this phenomenon, to a point, still continuing to this day. Walmart rallied recently because it's working with OpenAI to create an AI shopping bot. So now something similar could be happening with these rare earth materials.
No doubt. So here's what we're talking about. Steel company Cleveland Cliffs announced earnings last week, and the stock surged 20%. And the results were fine, but definitely not worthy of a 20% rally. Instead, it was because of rare earth materials. So CLF announced it was exploring commercial rare earth mines at two properties in the United States, Minnesota and Michigan, two obvious regions more friendly to the United States than China.
Yeah, they were exploring and bam, it jumped 20%. And it's only one example, but we could be on the cusp of an environment
No doubt.
where metals, mining stocks get this additional boost just because they're investigating rare earth materials, mining, refining, all of that good stuff. Now, clearly, anything rare earth material specific has had a huge run up this year. Some areas are up over 100% year to date. And direct play rare earth material stocks like MP Materials, they're up over 400% year to date. So it's been huge in those areas.
No doubt. So the question is this the new AI? And it could be the next frontier. We're actually looking at potentially adding rare earth exposure to some of our advance and protect investment portfolios that we manage for our clients. But while we may be bullish on the sector and just the market in general right now, we wouldn't just sit and invest on the rare earths or any portion of the portfolio. We have a sell discipline on every investment that we hold. So for now, we're very bullish. We're riding this wave in the market, but obviously we won't hesitate to get out if things change.
Yeah, and of course, we monitor our positions every day. If it deteriorates, we get out. And if you're in retirement, you should have a sell discipline, a way to exit the stock market and protect your money if the risk gets too high. So if our investment philosophy resonates with you or you want to learn more, reach out to us at bnwealth.com or call our office at 847-780-2980. All right, don't go away because when we come back, we're going to talk about tax loss harvesting. All right, welcome back. Thank you for tuning in. This is Money Hour Radio, a show where we try and help you grow your money, pay less taxes, and of course, have a beautiful retirement. I'm one of your hosts, Matt Nadeau. I've got with me my co-host and business partner, Ben Barzideh.
Hello, everyone.
And of course, we're both the founding partners, wealth managers at Barzideh and Nadeau Wealth Management. We're a comprehensive financial planning firm. We're located right in Barrington. We're local. We serve the greater Chicagoland area. So if you ever want to work with a great local advisor who cares about you and the community, we're your go-to here.
No doubt. And we have a simple motto: do great work, have fun, and give back. And that's why we created BN Giving, a way for us to invest in your purpose with you. So if you become one of our clients and you're a faithful tither or a regular giver to a qualified 501c3 charity, just let us know. Each year, we will match your donation up to 10% of the management fee that you pay us.
Yeah, this is a movement we are pioneering that's unique to our firm. And it's one that celebrates a culture of giving. It's a more altruistic way of doing business. And by partnering with like minded clients who share our vision for generosity, we aim to align our values with yours, and it helps your generosity go even further. And as our firm grows, so does our collective impact by utilizing our BN giving philosophy. So, by the way, if you're not a regular giver, we understand not everybody is, and that's okay. We'd still be honored to work with you. But if you are a giver and you would like to explore how you can join our BN giving community, just reach out online at bnwealth.com or call our office at 847-780-2980.
All right, so let's talk about tax loss harvesting and how it's a potential way to turn lemons into lemonade. And tax loss harvesting is actually a very powerful tool in the arsenal of tax efficient investing. It involves selling investments that have declined in value to realize a capital loss, and this loss can then be used to offset capital gains from other investments, thereby reducing the investor's overall tax liability. And while it may seem counterintuitive to sell at a loss, this strategy can yield significant financial benefits when executed correctly. And it can lower your tax bill, improve portfolio efficiency, and support long-term wealth building. Now, the mechanics of tax loss harvesting are relatively straightforward. So here's an example. Suppose an investor holds two stocks. Stock A has gone up and stock B has gone down. By selling stock B, the investor realizes a capital loss, and this loss can be used to offset the gain from selling stock A. If the losses exceed the gains, up to 3,000 of the excess can be used to offset ordinary income annually, with any remaining losses carried forward to future years.
Yeah, so that's the mechanics. But one of the primary benefits of tax loss harvesting is tax reduction. That's a huge benefit. So you've got these capital gains. They are taxed at different rates depending on actually how long you hold those assets and also what your overall income level is. So if you can offset gains with losses, investors can potentially push themselves into a lower tax bracket or avoid just triggering higher rates in general. And this is especially valuable in years where gains are substantial or when an investor is nearing one of these thresholds that would potentially increase your tax burden. So another advantage is it generally also allows you to do some portfolio rebalancing. So tax loss harvesting provides an opportunity for you to go in, you reassess and realign your investment holdings. And again, when an underperforming asset is sold, the proceeds can be reinvested into similar but not substantially identical securities. Or you can just put the investments into something else, something that you like better. So by doing that, you actually avoid one of the issues with this, which is called the IRS wash sale rule. And what that is basically it would disallow this loss deduction you would get if you buy the same or basically a substantially identical security within 30 days. So you don't lose that loss permanently. It's some crazy rule, but you just want to avoid that in many cases. And if you reinvest wisely, investors can maintain their desired overall asset allocation while improving your tax efficiency.
And then tax loss harvesting can also support long term wealth accumulation. And by reducing taxes in the short term, investors can reinvest more capital, potentially compounding returns over time. And this is particularly beneficial in taxable accounts where the gains are not sheltered as they are in retirement accounts like your IRAs. And over decades, the cumulative effect of reinvesting tax savings, it can be pretty substantial. However, it's important to recognize the limitations and the risks. Tax loss harvesting is most effective in times where we have volatile markets, where asset values fluctuate. In consistently rising markets, opportunities to harvest losses may be more limited. But the reality, though, is that if you're diversified, even in rising markets, there's usually some positions that go down.
Yeah, and you don't want to do this blindly because it you need to really focus on a few different things. And so for one is you've got to have this strategy requiring some careful tracking and timing to avoid that earlier discussed wash sale rule and to ensure you're in compliance with the IRS rules. You got to also think about if there's any transaction costs and maybe an impact on your overall investment strategy. You don't want to blow everything up just to try to do some of this. Um, Now, if you're a high net worth person and some people with more complex portfolios, this is where we typically see tax loss harvesting become very valuable because one, high net worth people are already in the higher tax brackets. They need to look for ways to cut. And two, it allows you to strategically plan around not only your income, but estate planning, gifting for charity. So different tools within this realm. So for example, let's just, if you've got harvest losses, you pair that with charitable donations of appreciated assets to then maximize your tax benefits because you're getting these two benefits rather than just one. So financial advisors often will look at these kind of strategies as they're looking at year-end planning with the idea of optimizing this outcome before you hit the filing deadline.
And bottom line, this tax loss harvesting that we've talked about, it can be nuanced, but it's highly effective strategy for managing investment taxes. And by realizing losses to offset gains, you can reduce your tax liability, rebalance your portfolio, and enhance long-term growth. And while it does require diligence and strategic thinking, the benefits, especially when compounded over time, make it one of the cornerstones of smart financial planning. And this is why one of our favorite questions, Matt, as you know, to ask people is, when was the last time your financial advisor actually looked at your tax return? Huh? The most common answer we get is never. And well, how in the world would they understand how to reduce your taxes or the tax implications of their recommendations if they don't even look at your taxes?
It's absurd. I don't know how they do this. For us, it's a starting point. It's like the blood test for your doctor. And I just want to use this tax loss harvesting as an example. If your advisor doesn't look at your tax return, what if you're retired and you're in the 12% bracket? Well, long-term capital gains, Ben, if you're in the 12% bracket, are already taxed at zero. So if you're just blindly doing this loss harvesting strategy, but you're not going to pay taxes on them anyway, it might be just a waste where you could be doing some other strategies. So I don't understand how you could not be a financial planner and not be looking at this stuff. So if you should be working with a financial planner like us who understands these concepts, who takes advantage of them. And if not, you could be paying unnecessary taxes. And many tax reduction strategies need to be done proactively before the end of the year, not before you file. So again, if you are in need of a financial planner, or frankly, you don't like your current one, we would be honored if you'd give us an opportunity to talk with you. And if our financial planning and our investment philosophy resonates with you, and you're looking to have your money managed with our Advance and Protect process or something similar, reach out to us. Let's schedule a complimentary consultation. We'll go over your financial situation, your goals. If we can help you, that's great. Obviously, if not, that's okay too. We'll still part as friends. So to explore becoming a client, it's really easy. Just reach out online at bnwealth.com, or you can always call our office directly, 847-780-2980.
And that meeting, by the way, if you come in and see us, it can just be more of an exploratory meeting where you learn more about us, we learn more about you. But we can even take that further, and we call it a free financial checkup. And this is a meeting where, if you want and you bring in your personal documents, we will look at all areas of your financial plan. We'll look at taxes, investments, insurance, retirement, income. And then if there's any holes in your plan, we'll let you know. And of course, if there's good areas, good things happening, we'll let you know as well. So that way, if things are good, you have peace of mind of knowing that you're looking good and there's nothing to fix. And if there are some holes in your plan, well, then you'll at least have an idea of what areas you may want to focus on. So give us a call at 847-780-2980, or of course, visit us at bnwealth.com. And also, we encourage you to subscribe to our weekly economic newsletter that's called the 5-Minute Market Brief. It's highly informative, succinct, and easy to read. You can sign up for it at bnwealth.com. And while you're there, of course, please subscribe to our YouTube channel. We actually already have a couple hundred subscribers. And for being out just a few weeks, that's not bad. But we would be honored if you would subscribe to that. You can get our previous shows, including this one, all on there as well. And sometimes we may throw up a bonus show as well.
All right. We'll see you all next week.